Hello everybody, here's a French Bull, hope you are all doing good. Today I want to take a bit of a step back in Bitcoin and look at the high time frame again. There is many indicators that we will cross over and see what we can take out of it. So here to start, a monthly chart of Bitcoin, where we got the Bitcoin logarithmic growth curve. So just a simple curve that tries to tighten the highs and lows of Bitcoin since the beginning and try to forecast them for the futures. Where we are right now, obviously we are at the lowest band of that log growth curve that we touched one time in 2020 and in 2011. So big picture, that's where we are on this 12, 13 years of bull market. We are at the lowest band of that growing market. Taking simply the simple oscillators that we may have here. RSI at the very low that it has been in the past. Last time was at the low of 2015 and 2019. And now that's where we are again. Same thing for stochastic. Previous time we were in oversold territory, where at these two previous lows, macro lows, and at the beginning as well here. It's the first low of the bear market. This is the first bear market. So yeah, that's pretty much where we are. So you see here, there's still the 1, 2, 3, 4, 5 here, right in the chart. Yeah, I'm gonna expand on that, but wanted to take a look at a few indicators from that you can find on lookintobitcoin.com. And just to emphasize at which point we are in Bitcoin. So here's a price forecast tools. You can see all the explanation if you read below how this indicator is made. So this one is a mix of several ones. So you can cross over, but try to forecast the potential highs and lows, yes, with certain success if we look at historical projection. And right now this balance price is sitting around 16,000, 15,800, 900. It is a CVDD that is a bit higher here. So I'll let you cross over that if you're really interested, because there's many of them, so I'm not gonna spend too much time explaining each one of them. Here's a 1 year and more hodl wave. It just show the more this orange line is growing, the more there is coins that are being simply accumulated, that are being moved to a new wallet and not moved for a year or more. So it shows a factual on-chain accumulation, not necessarily factual accumulation, because each time you buy Bitcoin you don't necessarily move them to a new wallet. It can be standing in an exchange or something, but at least it shows some data that cannot be cheat, and give us significant view, I believe. You can see each time this have been growing, it show clearly that was accumulation. We find the top of this accumulation trend as we start to go in a new bull market, where the one that have been accumulating during the downtrend are selling during the uptrend. Simple as that. We reach again such a level in the last bull market, significant one in 2020, to find the top. Well, which is interesting here is that we usually see decrease happening until the top and starting the downtrend, and start to accumulate again during the downtrend. Here it really shows how the call have been sitting occurring during all this period from the early 2021 to mid 2021. So during all this downtrend as well, the first leg down. MVRV set score. So which one is that? Market cap minus realized market cap. I think we have realized market cap somewhere else. Should start with that. It's a realized price. We have realized cap here. At realized price, I simply again, it shows the average price of which the Bitcoin that are being moved, what price Bitcoin was in the market when this Bitcoin moved. Another way to say it is risk capitulation is a metric used to here is the value of all Bitcoin at the price they were bought divided by the number of Bitcoin in circulation. So an alternative metric to market cap divided by the price. And we can see each time we went below that realized price that were good accumulation price. And that's exactly where we are again, slightly below, or hovering under below it. So here we have market cap minus realized cap. Market cap value, the current price of Bitcoin multiplied by the number of coins in circulation. This is like market cap in traditional market. Share price multiplied by number of shares. So it is simply the market cap. Realized value, the orange line, rather than taking the current price of Bitcoin, realized value takes the price of each Bitcoin when it was last moved. So last time it was sent from one wallet to another wallet. It then add up all of these individual prices and take an average of them. It then multiplies that average price by the total number of coins in circulation. So it takes in consideration the price of Bitcoin when each Bitcoin is being moved. And the Z-score, it's a standard deviation test that pulls out the extremes of data between market value and realized value. And so yeah, obviously it go up very much each time the market cap is a lot higher than the realized cap when price move up really fast and there is not enough Bitcoin being moved on chain or even being exchanged on exchanges compared to the speed the market cap is growing. And on this indicator again, which you can see, we have spike at the tops here. There was a mid bear market here as well, like 80% drop on that time as well, 2013. Yeah, and I've been pretty nice to mark top and bottoms. Last one was a bit smaller again. Stop. The same thing we saw on the log growth curve, right? We never really reach our upper trend line curve. But again, we are into the green zone because price have been moving down relatively slowly and at least for a long period of time. So there is enough Bitcoin that have been moved and now we're reaching area where there is more Bitcoin moved at a loss and a profit. Rodel ratio. Which one is that one again? So this indicator uses a ratio of realized value hodl waves. In summary, realized value hodl wave are different H band of UTX. So weighted by the realized value of coin which within each band. So yeah, rodel realized cap hodl wave. It's a bit of a deviation from the hodl wave, which show again how long Bitcoin I've been ordered in the same wallet. So interesting chart again. We talked about that one, but it shows a yellow zone in the middle. Can we maybe delete a few here? It's growing very fast at the bottoms. Just show that there is Bitcoins are being accumulated in some wallets and not being moved, so they age and go into the 1 to 2 years hodl wave, because bear market lasts usually a year or two. That means they are being accumulated simply. And so the rodel wave choose that data and weighted with realized value. So at which price this Bitcoin have been moved to this wallet. So it makes the thing even more obvious here that the 2 years, 1 year, 2 years hodl wave is growing a lot during this accumulation period. And that's again, we are at level we saw. Not sure you can see it clearly here because the color are really similar. Yeah, yellow 1 year, 2 year hodl wave reached these low levels during the bottom here as well again, keep dropping until we started to go up, and we are at a similar level again, slightly higher than the previous one and the previous one. So Rotor ratio, ratio between the 1 week and the 1 year, 2 year. Well, yeah, again, when the 1 week rotor wave is ratio is a lot higher than the 1-2 year, and the ratio it's going crazy high. That indicates top, and when it's slow, it's indicated potential bottom. And here again, we are into the what have been historically the lows of Bitcoin. This one as well. So again, it simply means that there is more value being held and sold. Net unrealized profit and losses. So again, it kind of shows same kind of similar ideas. It's just that when we are below zero, there is more Bitcoin that are being moved at a loss than at a profit. And usually it's a good buy, you know. Good buy when people are selling at loss. And we are in the green zone again. Still a slight, significantly higher low compared to the last two previous ones, but it tends to be a little higher each time. So we are more losses than profit. Other wave, we saw them. Coin days destroyed. Yeah, that's CDD that we saw. That's the CVDD. Okay, I'm mixing up. So the coin days destroyed takes a number of coins that have moved on chain at a particular time and multiplies that value by the number of days since this coin will last move. So number of coins multiplied by days since coins last move equal coin days destroyed. And so the idea behind this, well, it's well made here. This metric therefore gave an extra rating to coins that have not moved for a long period of time. Why so? Well, because Bitcoin investors who have been in the market for a long period of time and have accumulated Bitcoin are likely to have a greater understanding of Bitcoin price cycle versus newer entrants into the market. We can therefore consider them to be smarter money. For this reason, there is value in tracking large movement in coin days distribution over time. It kind of shows when the historical whales are selling or buying simply. You can see that it's growing exponentially as we go into an unfavorable market each time. That's the top until it stops. Signal potentially a bottom. Again, we saw this large movement that's really started at 14k, even a bit lower here, but really starting to go exponentially at the beginning or in the middle of the bull market and topped out in this 40k area. Since then, we didn't really see much of this historical wells open coins. Well, there is here that is less visible because it's more it took a longer time. It's not like accelerating here, getting exponential into the run. But that was significant during the in fact, during the hold on trend here. Now we are not saying any realized price. We talked about this. That's the price of each Bitcoin when they were moved. Bitcoin invested to 2 years moving average multiplier. That's just a 2 years moving average. So each time we went below that 2 years, it was pretty good buy, obviously. And trying to forecast tops as well by multiply this 2-year average by 5. Simply. Right now we are clearly under it. 200 weekly moving average, and the same thing. I know we talk often about it, but we are slightly below it. Fear and greed index. So there is a historical chart of that on this. And yeah, clearly we are into fear since the top, which is interesting here. I've been into fear since the top, but a lot of extreme fear. Now, should we see another down? Let's see. Because here we spend a lot of time into fear, extreme fear, before dropping another 50%. So at the same time, we already did here as well. Bitcoin rainbow, so that's similar to logarithmic curve. It is one, it's just a logarithmic curve, and we're rather at the low. Powell multiple. Okay, so that's look at the value of the new minted Bitcoin against a yearly average. So in Territory, it's supposed to highlight the value for miners. Are they mining for profit or not so much? And when it is in the green, it means that the profit that can be put from mining Bitcoin is very low, if not negative for some, obviously. So yeah, again, we are at a very low here again, the green zone. And yeah, when we reach this red area, it just means that almost anybody can mine Bitcoin and be in instant profit. Which again, we didn't reach as much crazy value this time. Ash ribbon. So we triggered a buy signal already a few weeks back. I know we have there is another one that is famous based on Ash ribbon on TradingView. Highlight a buy signal. Simply, that have been pretty accurate in the past. Like signal here at the low, several of them here. One here at the low, one here before a nice run, another one at the low, and another one before we're getting acceleration. Here again, here again, and the last one happened a few weeks back, last month I think. August. And Bitcoin hash rate. I find it interesting because, you know, the bear market, it's debatable, but for me it started really in 2021. That's when we had China ban on Bitcoin mining. So where we see a big drop in the hash rate. Since then, we are a lot higher than prior to the ban. I mean, we went from 180,000 to 270,000 on a low at 84. So significant increase, and it never stopped increasing even since we topped. So it means that there's still more and more power being dedicated to mining Bitcoin since we topped out. And miner doesn't seem to be afraid of it, of the current price action, right? There's also more efficient hardware for mining that can explain in part the constant increase in hash rate, which doesn't necessarily mean there's more people or it costs more energy to mine because the hardware is getting more efficient. So it causes an increase in hash rate overall. But still, that means there is still investment, there is still confidence from this part of the industry into the future of Bitcoin, which is quite contradictory to what the price action is, really. So finding it interesting to see how crazy it is, and it's really increased a lot. I mean, we went from 190,000 million. What am I saying? 190 million to 270 million. So an increase of more than 50%. Or nearly 50%. Since like July, end of July, since we are at the bottom here. That is that for what it is. Now coming back on this high time frame chart here in Bitcoin. There's a thing here that I didn't really explain, but here what I'm highlighting with a 1, 2, 3, 4, 5 is a potential micro HTF count for Bitcoin. That's what support my initial bias here for my main count, saying we have our first wave finishing here. We have divergence indeed between the 3 and the 5 here as well. And so we reach overbought territory on a monthly RSI for what I would believe to be the first microwave one here. Reach not oversold, but slightly below 50, so the lower level here, just at the bottom of what I'm suggesting to be a microwave 2. Then we have this bull run reaching again overbought for microwave 3, reaching same low level, a bit below 50, for what I believed to be microwave 4. Now, if we follow this, that means that this wave is enough to print a fifth macro, which would mean we finished 5 waves up. Which here I should, I mean, I have a count for it. Bearish count here. Simply. Pretty much it. At first, I was looking for the wave 5 to reach higher level here. To reach, in fact, the log rest curve high and print a nice bearish dip here. We do have one here. I was looking for a bit stronger move, clearly. And so if I'm basing my macro wave count of this, well, it means that we already have had our 3 impulses and 2 pullbacks, completing potentially, yeah, a macro impulse here. Now, as we have quite a different 1-2 here, compared to the rest where we have smaller and side wave. I think I have the count somewhere. Yeah, 1, 2, 3, 4, 5. Here we really have a quick wave 1, but a very long wave 2 of lower degree. So that's why I'm still considering this to have another leg. Not necessarily very well supported by this monthly high, which make me cautious about it. I was confident about it when we were still here, you know. We have a nice wave 4. The closer we come to invalidation, the more I have to doubt this count. But the idea is the same, right? To have the 1, 2, 3, 4, just extended the 5th a bit more here. You could argue we have bull div, hidden bullish divergence between these lows. And and at the end of the day, we're still in the area where we should favorize accumulation. Take that for what it is. Again, I'm not yet dropping the idea of us being into wave 4 here. And validation is stop of wave 1, so we might come to invalidation, but we did not yet. Invalidation here is 13,830. So I kind of want to keep this count as a main for now. Still, you can see here the fib time is just showing the time of wave 3 projected with a fib, or the proposed wave 3. So it shows that we are about one time 40 the time it took for wave 3 here. Just because we need to, or at least I need to see comparable time between waves of the same degree. And so we don't want a wave 4 that will last 10 times the time of wave 3, or you have to find another count. But here I will say between 160, 180 is still acceptable in terms of time for this move down to be a correction of this move. In terms of time, in terms of movement down quite a lot, but on log scale, you know, between 382 and 50, it's a good target for wave 4 as well. Yeah, from the bottom of wave 2. So here, if we use flip tool on log, it's still quite okay. But we are clearly getting close to invalidation. So remain my main count here. What alternative do we have? Alternative bullish count. Should we dip below the top of the proposed wave 1 here? So nothing new here. Again, if you've been watching my stream, same counts, but yeah, just wanted to make a recap out of it. Potentially we are into an ending diagonal that will allow us, well, to have still movement up, but with contracting price action overall, which in a sense makes sense for me for maturing asset to some kind of contracting price action as it is maturing, so getting less volatile, quote unquote. This count, we can subdivide this in an ABC and have a correction here on a 1, 2, 3, 4, 5, because diagonal can be 5 or ABC. I mean that here we'll be looking at an ABC or 5 waves. I'm more betting on the 5 than ABC, but anyway. This could allow us to dip a bit lower. Here we have the 1-1 extension of that move on linear, or potential ABC move target around 12,000. So that will, yeah, allow us to just retest that area, just, you know, simply based on a support resistance structure. We never saw Bitcoin retested its previous all-time high of well, never. Here we did, because we had an all-time high for a few months. Otherwise, main one never tests, right? We already retested that, so that's already a first. Nonetheless, it is support. We have a monthly level here and here, so between these two. Since the block here is also based on the that automatic reaction of the first distribution element here of the buying climax, I mean, which is also the monthly open close. Okay, so I mean, yeah, this area, if it's not being lost from market structure point of view, it could really be the bottom, and we know we potentially have a count that I mean, we have a count that would support that ID. Can find something that is bullish even if we are overlapping this, knowing that in that count 1, 2, 3, 4, 5, so in theory this would be invalidating if we overlap wave 1, because you know wave 4 cannot overlap wave 1 unless it is a diagonal. But here we have wave 3 that is significantly stronger, bigger than the wave 1, so we cannot have a contracting diagonal here. Can we have an expanding diagonal? I mean, we could. I'll guess that will bring us a lot lower. It would be a kind of a variation of that. It will say 1, 2, 3, 4 or 3 here, whatever. 4th and 5th though. Yes, that would be a more painful pass. It also gave more potential uptrend at the contracting diagonal, obviously. Minimal target should be that wave 5 be bigger than wave 3, so more than 1 extension on linear. Also, wave 4 no need to be bigger than 2, but yeah, it's already... What? Yeah, obviously, because... Yeah, obviously. Because here I'm looking on a log scale. It doesn't make sense. So I mean, why not? But that would probably mean more than side will come to this 6K. And then the count here inside, that will probably mean we are 5 and still have something like this to come. Anyway, that's not really one of my favorite counts. Just to say that, to make clear that yes, overlapping 1 is an invalidation, but as we are most likely into a macro fifth, then we can have an ending diagonal. And what kind of diagonal could we have here? An expanding. And here you see how that could be. Alternative pool, yeah, I have alternative count here still, but yeah, I don't have a lot to say here, just to keep in mind alternative, 1, 2, 3, 4, 5, that could work as well. We don't breach rule, could mean this as a wave 1. Maybe we have some kind of flat here for 2, making this correction kind of enough to suggest it can be a correction of this whole move in terms of time, because otherwise this is way too quick to be a correction of this. But how it does make sense as we are just going down here and we don't really have anything that look like a wave 3. I mean, it could make sense should we have indeed a count like a 1 here, a 2, and go in a big 3, 4, 5. And that will give crazy high, potentially crazy high target. On the bearish count, we already talked about it. 5 is finished, and that's it. Well, that's it. Either the experiment failed, and we made 5 waves, and now we are going just down to 0 and beyond. Or we are going for macro wave 2, but that would mean for me a very long period of reaccumulation, because the time that took, so use the flip time to project that, 23% of that time bring us to June 2024. So a year and a half still. And that's kind of the minimum we should be seeing. And in terms of retrace, that should mean reach 2018 low, because that's a 236 retrace as well. That's kind of the minimum retrace we should see for wave 2 of this envergure, of this size. At the same time, I would not really expect anything lower for this to be still bullish, because losing this is already quite a stance. And yeah, reaching lower level, that means that the total market cap of Bitcoin is becoming very low. So should we see Bitcoin go to 100k or million or beyond, it should mean that there's rich people interested. I mean, the very rich ones. Interesting in Bitcoin. And if there are price just can't move that low, because at that point market cap will be just 100 billion. I don't see how that will make sense in any sense. That would also mean most of the industry going bankrupt at that point. The crypto industry, I mean. But yeah, I mean, can keep that in mind. Should we go into some kind of dot-com bubble burst? And we see indeed full capitulation, and could see several years. I mean, this is a minimum. I will see a bottom potentially printed on such account, but potentially could take years and years. Who knows? Yeah, I have an alternative in between here as well. So idea here is to make an extension only into the wave 3. So we have a macro 1, 2 here, and a sub 1, 2, 3, 4, 5 for the macro wave 3. So we would be in a macro wave 4. So still correcting all of this, not the whole market, but all of this. So still looking at a pretty long bear market, supposedly to 2024 still. And here maybe finishing 5 ways, bouncing, just a projection, not necessarily the right one. But meaning, yeah, we could come back into the area of less adopted wave 4, which is where a wave 4 is supposed to finish. Yeah, that's it. That's it. And just to make things clear here, because I talked about that being a clear 5 waves up to me, clear impulsive move. It fit all the characteristic of it, the volume wise, strength, extension, 1, 2, 3, 4, 5, everything fits very well for an impulse move. So when I'm showing a count like this one, showing a 3, 4 here, I took that idea from what was it? So the idea is to have a wave A here, a sub wave A of the B with a triangle A, B, C, D, E. So A, B, so A. How did I make that? A, B, C. Yeah, okay. The idea is to have a wave C of the B here. So an A, B, C somehow. Right, A, B, C here, 161.8. And the retrace is quite a lot to be considered flat here. 126, we go beyond, but if we take the 161.8, kind of slow, okay. It's not really a proper count, but I mean, we have a what is a sideway here. So I mean, I have to consider this as potentially a corrective structure on itself. The most obvious being just a corrective structure here, and here the first impulse correction of the new impulse. that has all of this is kind of sideways. Yeah, okay, how can I fit a corrective count with an impulse here? Well, it's by having a flat here, ABC. ABC that make us a wave B of an ABC. We reach 161.8, so that's okay for a target for wave C. And here, if I take that, we reach the 1-1 extension here on log. It's quite a nice target again for wave C. And this is kind of a mess, but you can have a 1, 2, 3, 4, 5 expanded flat. I guess it worked better as an ABC. Yeah, just here to highlight some light to process on that. So here we go, 50-minute video. What's up with Bitcoin now? No, still on this. A recap of the count since our top here, 69K top. There not so much of it. Well, simply, yeah, still looking at this 1, 2, 3. So this has a wave 4, and here in the 5th. Could this wave 4 be extended still? Yeah, I would say yes, especially compared to 2. It could be. I think it's enough like this, but yeah. So that would mean that we need to count the 5th wave since that's top of August. Alternatively, WXY. So we found out bottom here, and we already started off our uptrend. Still have a problem to count a corrective move in this, but nonetheless a valid option here. An alternative corrective count. Yeah, WXY, XZ. We have nice ABC here, here as well, and here potentially in process. Are we already in the C, or are we still in the B? That remains to be seen. For now, we have a mess that is not countable. Not easy to count. The ABC finished. We have a bottom here. And that's the same count that we talked about. The target here for the 5th should be 0.618, so about 15,900. That's what we'll be looking at. Should we dip a bit lower? Ideally, yeah, that's kind of my ideal target. That's a wave 1 projected from wave 4, right? On log, obviously, because linear give us way too low target. So slight variation. You see, instead of counting 1, 2, 3 for 5th, could this wave 4 being part of this impulse move? I think this is a bit pushy. I mean, the wave 1, 2 really small compared to the 3, 4, 5 here. But yeah, I guess it's correct. Right, I guess it is correct. Sense. And here, just in between, what could be 1, 2, 3 then, as we make a new low for 5th still. Or just an ABC in that case. That's slight variation. All of them suggesting we should be finding we have better chances of being to a bottom or close to a bottom, at least a low Kelvin. Because even in the bearish IDs, like a bearish impulse here, well, this could see lower target obviously as a 5. Ooh. That's the thing. In theory, it could go still significantly lower, even if we are in the last move, in the last fifth. And as 5 waves, if that was part of a bearish structure, or 5 waves is impulsive, so bearish structure, unless it is part of a flat like this. To mark the point, should this be just the beginning of a trend down, a longer one, we still have good chances of seeing a nice bounce before continuation, and most likely looking at the 30k region to be tested again, which would make the most sense. So yeah, clearly everything is flashing buy on the higher time frame. That's a fact, right? Problem we got here is, how do we count anything finished from here to here? Is it possible? Because we know we have potentially counts that are finished at that low. That's the case. We have a wave 1, 2, but this low have to hold for this to be the first wave of a new trend up. In that case, we need to be able to count a corrective count into this. And you know, there is not so much. Here we have an impulse, so I talked many times about that. I believe to be part of a flat then, because it is the highest point, but we still go down. And we can count 1, 2, 3, 4, 5. So a flat here, okay. But even if I do this, so we have 5 down, a flat for the wave B. When I mean, yeah, wave A, wave B. We still need to be able to count 5 waves down from that high, which we count here. We have a lot of consolidation here, and we have our lowest point here. And we don't have anything that can be counted here. We don't have a 1, 2. Because this consolidation could be a wave 4, for example, but there is no wave 2 here, so can't be a wave 4. I don't know what it is. That's the problem. Whatever I do, whatever you do, how do you count anything from here? Considering this, I don't know. I really don't have any answer on that. All we can do, again, as I emphasized previous times, is focus on the range here and which side it's gonna break. And at that point, well, we try to make sense out of it. If this break up, then we'll start to count from here, 1, 2, 3, 4, 5, or an ABC, and we'll see, do we take that high or not? Because if we don't, then we can still be in some kind of correction structure. This could be wave 1, And this could be part of a correction. Could even, yeah, 1, 2, 3, 4, 5, for example. If we make a lower high, yeah, potentially we have a correct structure that say we go down still. It will make this a wave 1. We can 3, 4, 5 maybe for an ending. See at that point. Should this break down even later? I'm gonna keep this as my main count here. Ending diagonal. So the idea here is to keep this indeed as a corrective structure, but part of the larger count here. So that would mean this low not gonna hold. This is just a wave 3 and we're still finishing a wave 5. So we need to count 5 waves from here, not an ABC. What do I do? Well, I still have the 5 waves here, still have the flat here, but for wave 2 instead of the wave B. And here I can count 5 waves somehow. Even here, we have a little 1, 2, 3, 4, 5, whatever. It could even be an ABC, in fact, ABC, and we could count, I suppose, an ABC here, or even down here. As it would be a diagonal, it can be both. It seems to be working better as 5. Especially because, yeah, here it's work better as 5. And this as a flat. Otherwise, for an ABC, I will probably take this ABC. The 1, 2, 3, 4, 5. So A, B, C. But in that case, I'm still stuck with the impulse move, which doesn't fit for wave 2. So I'd rather take this as a, yeah, as a 1, 2, 3, 4, 5. And this as an ABC. I changed because now what we're gonna count from the top of wave 4 is 5, not an ABC. But yeah, the idea is that wave 4 will have been finished here. Could it go higher? I mean, it could, but the more we continue sideways or the higher we go, the less it's look like a contracting price action. That's what we need for this to be an ending diagonal. And so yeah, ID here, yeah, ABC, I talked about that. We have flat into to another flat. Yeah, that's messy. Here we have, again, clear 5 waves up. Wouldn't be so much surprise if it failed. Failed to hold. So ideally, yeah, that would mean we are in a 1, 2, maybe 1, 2, 3, 4, 5, 3, 4, 5. We eventually reach our level. Knowing that we had a 15k level from what? Yeah, from that 15900. So it is a 0.618 target for this to be a wave 5, which will be the idea here for this ending diagonal to be a wave 5. And you know, even if it is a contracting diagonal, it is normal for the wave 5, for the 5th wave to be either front-running the trend line or overthrow it. Knowing that the invalidation for this is for wave Wave 5 need to be smaller than wave 3 overall. But here we are on log, on linear, so invalidation here is 15200. So we have much room. And supposing that this is wave 3 and wave 4 here, wave 5 will need to stop before this 15,200. So a bit of capitulation here as we might be taking supply below June low. Ideally, that's what I want to see. That makes the most sense here for my any count locally. Nothing new here. Alternatively, you know, should we be really bearish and, for example, go for the lower target of a wave 5 here, which would be like maybe 12k, or even lower here. Yeah, it is on log, so should we see yeah, another acceleration? Well, we will be simply still taking this as a wave 4 of some kind, 1, 2, 1, and this could be wave 2, or could be correcting up again and still be a wave 2. And meaning we could see quite an acceleration here, much more bearish path. Again, considering all the high time frame indicator I show you at the beginning of the stream, I'm not especially looking for such movements, but I'm not ignoring the possibility of it. And yeah, that's pretty much it. I cannot count a complete wave C here. I could have here. No, I talked about it and said, okay, this could be the low. This doesn't seems to be really impulsive. We have really more corrective count, but it could, because I can fit 5 waves into this, even if it's scrappy with an ending diagonal here. At least it is somehow valid. Now this doesn't work, because this has a correction of these little moves that doesn't work at all. So all I can take out of this, if I keep my Eliotician glasses here, is this is corrective. This is not the hand. It cannot be. Again, it can be part of, for example, an A, B, and C that will go above the highs here. That is a possibility. But I don't see any count that would suggest this is a low, and now we have our low and we are going into a new trend. That doesn't mean I'm necessarily right, but that's a bias that any Eliotician should have here. That's also why I always emphasize the idea of trading the range and of being able to shift between Elliott wave and other thing. Being able to see the recognize a trend, a reversal, a range, and being able to trade that overall, having a bias with your counts if you want, or at least a general idea of the structure and the path you can take. But that shouldn't be the only technical analysis at use, in my opinion. And what the range says that we're still rather at the bottom of the range. So in theory, I should be looking for the high of the range here, or at least here. I don't see how this could fit for now, but maybe I will see, for example, guess I see it now. A, B, C, maybe. Okay, I can fit something. Yes, let me check. A, not even the 0.618. I was trying to consider this as an A, B, short C, which could have, if that was the case, A, B, short C could have an A, B, short C, an A, B, long C, which would make a W, X, Y, potentially. That doesn't follow any guidelines here. That doesn't necessarily break hard rules, but we are really short wave C, very long wave C. Yeah. How could it be that we have an A with a flat, ABC? This has a wave B, so into a bigger flat, and here into a wave C, which potentially make A, or even maybe B and C. You know, that's not the count I should be looking at, because it's not it doesn't look like the natural path. But all that to say, should we see a trend? Well, even if I cannot initially find a good count for it, I will have to deal with it. And there's always a possibility to find something that say, okay, we can move up there and still reverse, or maybe even continue up. If the trend is here, you have to follow the trend in the price action, that's for sure. And we had quite a significant low cut here. We did took the low on most exchange, and at least on derivative, took those lows. We have quite some volume, quite an impulse move. Here, quite a retest. Still diminishing volume. If I'm looking at aggregated spot chart, I see we are seeing diminishing volume here. Still a great reaction, even compared to this. I mean, this is a nice spike of volume, still a bit lower, but nice spike of volume for this to potentially be a spring, you know. Here, a failed spring, because here on spot it didn't took the low, but that's the structure of it. Now we had a successful retest. It's potentially an ABC. Again, I'm not so sure about our current price action here, but It's very similar on a smaller time frame than what we had here. Very similar. Again, here I'm stuck with how do I count fives down here. I mean, in terms of targets, we reach what we have been looking at. So I'm on a 15 minute here, right? Looking at the high from 14 last week to the low today. We reach 1-1 extension a bit beyond, but we reach the target for this to be potentially an ABC move. Because this be a wave 4. I have to extend this a lot, and still I have an ABC here. Again, I'm not finishing 5 waves from that last significant swing high. That channel market structure. So we know this is a significant one where I should be able to count 5 here, and I can't. I can't. So there's something weird here. Can count 5 here. Yeah, that work. We have a 1, 2, 3, 4, 5 expanding diag. ABC, ABC, short C. Can see something, but I'm not extremely confident about that. About the potential of this to really go. Nice 5 waves here. I guess this could continue to squeeze. Yeah, to squeeze towards the weekly open. ABC maybe. But then it still doesn't make sense here. Trying to see if we have ABC. I'm looking for a flat again. Yeah, max target 161.8, so maybe it could even be 5 here. So yeah, lower time frame Elliott wave not gonna be very helpful here. So I'm gonna pass on the lower time frame Bitcoin price action. You know, what have been the bias here? It's well, simply it was to look for an ABC move, so that's what we got. I was looking for the lower liquidity to be tested around 18,600, potentially down to 18,400. I would have preferred to have a longer accumulation to really position on a range position. There is not. I didn't have any completed count, so yeah, or like being able to do it just spot position on that, just based on some limit into this, because I was looking for a reaction into this area. A rich golden pocket, mini level I was looking for. But that's all. I mean, I can say, okay, I'm ignoring ignoring all the lower time frame count, and I'm just keeping this chart, and I say, okay, I have a valid A, B, C here. And that's it. And here I potentially have a 1, 2 then. And we're going for 3, 4, 5. Can say that. I just cannot have a count that finish with 3 wave here. So I'm really suspicious about that. And I say we could have here as a wave 1, as we have pretty clearly 5 here, it can be a wave 1, and then we are looking to buy the retrace for that, because of that. But it's also very possible that this is the end of larger corrective structure here, with, I don't know, A, B, C, right? Which would mean this low it's not gonna hold. So again, it makes sense to have weird price action like this. Weird in the sense that we don't have clear completion here, and very fast, strong reaction to then go take the low. And maybe in that case, I mean, I could fit a 1, 2 and a sub 1, 2, I don't know where. We still have this 3 wave in the middle. Well, I guess we could have a 1 and this as a wave 2. A, B, C. We could even reach here. Could mean a 1, 2, and could mean still going down pretty significantly, you know? Yeah. But I'm gonna pass on this. I said it's a lower time frame. I can do. We have to see where this range gonna break, and be aware of the possibility of any side it break. It's finally break. Be very aware of a potentially range deviation, acceptance back below and go break the other side. Or rearrange deviation and then go back. Should this be as I suggested in this chart? I mean, if we are, for example, in a wave 5 here, we could indeed go to break this. We'll see how we count what happened here, but I mean, have a significant flush, finishing our wave down, and then reverse. Or should this be part of a larger corrective move? Still, well, it could break indeed, reach a high, but it could also just go for slightly higher target, deviate, and continue down, being corrective. That would actually make sense, as this range have been lasting forever. Had already many fake outs, both sides, many at least. Yeah, at least 4 of them. Doesn't necessarily have to make another fake out, but you know there's supply, there's volume, big volume being played here, big supply, and there's still some. People are very emotional here because there is a very bearish. So they want to capitalize on the potential breakdown, or they are strongly bullish because they are looking at high time frame indicator that say here's a buy, should be buying. But I'm not, and when this breaks wait, that look like a very nice bottom now. The range is claim. I'm gonna get in on the retest and then it reverse. I'm very bullish, and now it break down. It lose June low. I'm gonna sell now, and here we go. Where is the last pocket of liquidity to be played? We don't know for sure. We have level we can trade out. We know we rather sell at the low and sell at the high and buy at the low. But there's a time where it's not gonna work anymore. Buying the swing fair pattern, I've been very profitable here. A bit harder on the sell side, but still. Not especially harder, I had more time in fact. Yeah. But I guess if we have to make again a fail break out of this, so out of this high and lows, I would say this is already quite significant, but should we do a fake again, fake out? I would expect a range, and that's why I say that, because we already had several SFPs. Now what I would like to see is a range, a small range deviation out of the range, to be a better trap. I will not necessarily be selling everything at that point, because it could be just a consolidation before continuing up, but I would rather bet on a fake out should we see a break and consolidation just above the range. Should we see it? Because if the range gets claimed, it might just not spend much time at the resistance that has already been rinsed. So yeah, it could be, or even here it could be just dropping significantly at that point. Guess maybe a bit less here because there was less time to position on the long side and the short side. Would show you well as well how the market to be a bullish market, even if we're in a full fear on the high time frame according to the fear grid index. You can see how we spend time at the high, several candles here, when we just have a wick at the bottom, because though when we go down it's to trigger stop and liquidation and position really quickly to not let people position with high leverage too easily at the low. While at the high, you can spend time because usually the sentiment flip heavily bullish when we are at the high, whichever time frame you are looking at it. But here, you know, there is people getting trapped and really bullish because we are at the high of a local range, even if we are very low. in the higher time frame, but yeah, nonetheless, even here we change the market structure. And here and here and here. We spend, yeah, we tend to spend much more time at the high and the lows. Okay, so thanks for watching, everybody. Hope that was an interesting video. And I see you soon for live stream next time. Thanks again. Obviously, don't forget to leave a like, a comment if you have any, and yeah, see you soon. Take care.